evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 2nd, 2012. Huge move in the markets on Friday. Lots to talk about, so let's get started. This is the chart of the S&P 500, and as you can see, you have this gigantic red candle going down here. This can be considered a crash on the S&P 500. We're down 32.29. And this is the chart of the SPY, which is the ETF that tracks the S&P 500, and same move here. Huge red candle to the downside, $3.31 at about a volume of 250 million. Okay, like I said in the previous videos, when you have low volume, you can float higher, but when you have higher volume, then that gives institutions no chance to prop the markets back higher. Now here's the thing, 250 million isn't all that very much in reality, but in relevance, meaning relatively speaking, when we're trading normally at 150 million, 250 million, that's 100 million more. That gives a chance for the markets to break down, okay? So let's take a look at what happened. We came down, we have this nice bearish consolidation right into almost the 20 moving average. I would have liked it to actually get into the 20 moving average, and then we actually took a dump, a huge dump, and we actually closed below the 200 moving average. Okay, so I'm sorry, the blue line is a 20 moving average and the yellow line is a 200 moving average. In addition to this yellow line here, we also have this gap fill all the way down here, and we have this gap window all the way up here. So do we have some more room to come down? Yes, we do. So Monday, there's a possibility that we may tag at least a gap window before bouncing higher, because we've already closed below the 200 moving average. But there's some contradiction in gold, contradiction in the dollar and the VIX. So I'm going to get to that. Let's get started on those. But before I do that, on the SPY, I just want to load my drawings here. I wanted to show you that even though we broke through this 200 moving average, we still have support at the 618 Fibonacci retracement. I've redone all of my mathematical calculations because of this big move. I was able to get more data, and hopefully I can get a better accuracy on the mathematical calculations. That's been working out pretty well lately. Okay, so I do have another mathematical calculation here at 123.13. This does not mean we're going to go straight into 123.13. However, if it does, then this would be a very good support level to take it for a long side on the bounce. Now, speaking of bounces, speaking of counter trend trades, before I continue, I just want to explain one thing. This down move here is exactly what I mean when I say counter trend trading is like pissing in the wind. It's higher risk, and you must be in and out of markets ASAP. A good example is if you waited for a good shorting level and took the short, then you would be a happy man today. Or if you took the short on Thursday, you'd be a happy man on Friday and today. If price didn't get to where your shorting level was, and not a big deal, you wouldn't be losing money today. Anyone that was long on Thursday were obviously not very happy on Friday. In addition, money management is the very most important skill in trading. You never go all in for any day trade or any swing trade, because a move like this on Friday can just totally wipe you out completely. Okay, so we're pretty much done with the SPY chart. In addition to this down move here, this move here is basically built on fear, or built behind fear. Okay, so there's three human emotions. There's hope, there's fear, and there's greed. Okay, fear being the most strongest emotion out of all the three human emotions, and there's more human emotions, but those are the three basis of human emotion. Okay, when the stock goes down and it meets your stop and you don't stop out, the reason why you hold on to it is because you have hope, right? You hope that the stock will go higher. A lot of times people who have that type of emotion will lose money, okay, because they'll hold into it, the stock will come down, they'll never be able to trade because either their capital will be trapped, 10 years later their stock makes a recovery, everybody's happy, but guess what? They're not a trader, they're an investor at that time. If you want to be a trader, then you gotta abide by your stops. Greed is when you're in the money, you don't put a break-even stop, or you don't put it in the money stock stop because you think the stock is going to go higher, only to find out that the stock is going lower and it's wiping you out. Perfect example of greed is Facebook. Okay, in addition to Facebook, before I get to Facebook, this is actually one of the stocks that I wanted to talk about today, is that people who took the Facebook trade actually was well rewarded on Thursday, but then got completely wiped out on Friday. Okay, so happy, sad, right? It could have been worse, but I'll get to Facebook later. The point being, if you are greedy, which is one of the emotions, once you're in the money, you want to put a break-even stop. Now, even though the markets come down or gap lower, then you take a stop on the gap, or you can hold it until the next support level. But there needs to be a technical reason why you're going to hold on to a stock or why you're going to stop out. Okay. Now, last but not least, fear. Fear is the most strongest emotion, and that can be shown by the VIX. Whenever you have fear, all your indicators. What a lot of people, they hear the term a lot of technical damage when they're talking about technical analysis on charting. Technical damage means a lot of support. If a market is crashing, a lot of support is being taken out like it wasn't even there. And if the markets are rallying, a lot of resistance lines are taken out like it wasn't even there. Now, the whole point being, fear is probably going to be the strongest, which means when the markets come down, a lot more times support lines will be taken out more often than resistance lines. Okay, let me give you a quick example of how effective fear is by looking at just the SPY chart. All right, let me delete all the drawings here. Okay, and I'm going to get my trend line, and we're going to go from the beginning of the year, because pretty much if you grab the bottom of the end of day on Friday and we just draw a line straight across from the beginning of the year, that's where we're open. We kind of gapped down in the first couple of days at the beginning of the year, and then we just rallied higher. Okay, so we're pretty much right at where the beginning of the year started. All right, so if I draw a line from the beginning of the year here, as indicated here, 2011, okay, I'll go up here and I'll draw it all the way to the point where the market started turning over. Okay, this day was May 1st, right? Okay, so we have this long line over here. Now I'm gonna draw another line from May 1st all the way to on Friday, which is current time. You see how small this line is, right, in comparison to this line. Basically, what I'm trying to say is it took this long for the markets to rally, all right, but it only took this long for the markets to fall. Why? Because fear is a lot stronger than any other base human emotion, which is greed and hope, and that's why we have such a market such a strong downturn today. When people are afraid, or people are scared, they're going to get out of the market, because money is the root of all evil. Everybody loves money, and nobody wants to lose their money. But when they see a huge crash like this today, or starting from this time over here, up here, they're probably just trying to get out as quick as possible based on any kind of news that comes out on CNBC, or if they're charting or charters, they see the markets just tank, then you're gonna have people selling. Okay, so the bottom line is that's actually what I'm just trying to say is, to the point, when you have fear in a downtrend, then doing a counter trend trade is not impossible, but very hard to do. Okay, you're adding risk to your bounces when you counter trend trade in a down market. Okay, in a bearish market, you're taking a higher risk, and that's why I always have my stops very close to my shorting levels. Okay, so when I have a short level that's met, I will short the market in a bearish market. But if it's never met, then not a big deal, because I'm not losing money like a lot of other people are out there today. All right, this is a chart of the US dollar. I had drawn this line in the previous videos. As you can see here, we have a lot of resistance up here in this line here. Okay, I told you this line here is going to be very strong resistance, and that's exactly what we're doing. What we were doing on Friday, we got that retracement off this. Now the next question is, are we going to have continued retracement down to this 20 moving average here, or are we just going to have like a day or two retracement like this, come back up, have a one single day retracement, and come back up? I mean, it really matters. It really depends on how much of a retracement we get. Now this retracement, again, dollar down, markets up, right? And then dollar up, markets down. However, the problem is, again, fear is stronger. So even though the dollar pulled back on Friday, the markets also pulled back, because the dollar didn't matter anymore. Everybody's running to gold. Okay, one thing I do like though is, if you notice, we had a lot of volume on the dollar on Friday. Okay, a lot of volume. So this could mean some exhaustion, at least for a small retracement down to this 20 moving average. If we get that, then we should get a bounce, or a small bounce in the markets on Monday. All right, but that remains to be seen, because there's a lot of fear, and it depends on what happens over the weekend. If anybody comes out with good news over the weekend, then we may actually get a bounce on Monday, which might be good for me, because I actually took a position, and that I'll show you later in this video. Okay, so that was the dollar, and I just wanted to show you, even though the dollar goes down, when you have a lot of fear in the markets won't even pay attention to the dollar, like it wasn't even there. So what will be the the indicator of what the markets may do, and that's the VIX. Why? Because the VIX is the fear indicator, or the fear index. Okay, so when the VIX goes high, the markets go down, and vice versa, just like the US dollar, except the VIX measures fear. All right, so right now, as you can see, again, all these charts that you're about to see, except for with the exception of gold, I believe, the calculations have been redone because I was able to get more data to give hopefully a better accuracy in the shorting levels as well as support levels. Okay, so we had a 382 retracement on the VIX, and then we kind of pulled back. If we kind of just zoom in here, we almost got to 382 on the VIX, and then we just pulled back. We do still have the target at 2864. A lot of people thought I was crazy. I mean, 2864 for the VIX to spike all the way up all the way up there in such a short amount of time. I mean, we came up, right, and then we retraced, and then now we're back up. We may actually get into the 2864. But before we do that, we may pull back a little bit into this 200 moving average before we bounce back up into the 2864. Again, that remains to be seen. However, the 382 level is a pretty strong level on the Fibonacci retracement. The 618, however, is the strongest. So this remains to be seen if the VIX can punch through this 382 level. We also have this pivot point level up here to see if the VIX can get through that as well. Okay, so that's the VIX. All right, the next thing we want to look at is gold. Everybody wants to talk about gold. Obviously, everybody's interested in gold. So I had this level at 156.32. Now, these levels only work. They do not work. I'm just going to be straight up with you guys right now that these mathematical calculations, they work pretty accurate for me. They caught the bottom here in gold. They've made it's made a lot of other calls and a lot of other stocks. However, the only time that these levels do not work is when you have a big emotional change in a general trading population. And what creates these changes is that of fear. So when you have a lot of fear, these levels won't work because you'll have a lot of technical damages, damage done to all sorts of ETFs and stocks. In addition, all other technical indicators will fail as well. Now, in addition to that, you have situations like earnings. When earnings come out, these levels probably won't work as well. So like in the case of Friday, these levels, some may hold and some may not, simply because of the just craziness of how many traders are just scared and trying to get out and run to gold like normal. So finally gold is acting like it's supposed to. So because the markets crashed, everybody ran to gold, and gold went into this 50 moving average. And I did say, if you look back in the previous videos, that I may take a short at this gap fill level here. All right, but I did not take this short. Why? Because there's a reason for that. Gold does have the possibility of getting up to this 162.22 level. If it can get up to this 162.22 level and the 200 moving average can come down right into the 162.22, at that point I'll take the short. Again, doing a counter trend trade is very difficult. At any time, gold could just just shoot higher, right? If I take a short on gold right now, gold could continue straight into this 162.22 level, and I'll be out of the money a lot. Okay, and then that's not what you want to do. My stop out would obviously be right above this line here, but again, I didn't really take the trade. I actually, to be honest though, I did have a level here, and I said, well, you know what? If it does hit this level on Friday, then maybe I'll take the trade. But it didn't get to that level. It actually bounced off right on gap fill, right into the 50 moving average, and then we closed right under it. Okay, so there is a possibility that gold could pull back. Basically, gold is in good resistance, but not good enough for me to take a short. 162.22 is my shorting level on gold. If it doesn't make it there before it pulls back, not a big deal. I'm not losing any money. But if it gets there before pulling back, then I will probably be sitting pretty, hopefully in a lot of money, because that's where my next level is for gold. Okay, this is the chart of JJC, which is copper, like gold. I just want to do a quick analysis on copper. So the JJC came right into this 7.5 level on the Fibonacci retracement. We went right into this gap, this pivot point here. So we are into some pretty good support. However, we can also get down to these two levels here. Down here at 4106 is the calculated level, and we do have a pivot point for a double bottom here. If we get past this double bottom, then we should get a bounce off this 4106. However, here's the thing: we already are in first support, so we may get a bounce in copper. Okay, keep an eye on copper. After Friday's move, it would make sense to do an analysis on JPM. Why? Because JPM is the leader in the finance sector. All right, so JPM came in. Again, I was able to make new calculations simply because I was able to get more data. We still have this bounce level here. However, we did consolidate right above it. If it had come down and consolidated, then maybe I would have took this line out, but I think it still has a pretty good chance of bouncing off this level here. However, I did make a calculation which was 31.79. Okay, this line right here, which is $31.79. Let me kind of zoom in here, and JPM went right into it. The low here is 31.77, so that's 2 cents off. Now JPM could actually bounce for a small bounce up to here, up into the 34.04 level before coming down. So this is how I'm going to play JPM. Okay, if it can get to the 35.95 level, then I'll probably take a short, guarantee, well, not guarantee, but most likely on JPM. If it can get to the 34.04, then I may take an intraday short. Okay, and that's if we get a bounce. If not, if we don't get a bounce, then I may take an intraday long position on JPM at this level here. But if it comes straight into this double bottom level here, which is also a yeah, just basically a double bottom here, then I may take a swing trade to the long side on JPM. Okay, so that's the plan on JPM. Right now, we may get a small little bounce on Monday. And a lot of times when you have a big crash in the markets, we get this thing called a dead cat bounce, and sometimes we get a small bounce before continuing lower. But it really depends on how much fear there is in the markets. We are into the weekend right now, so at any time, Uncle Ben can come out or the news can come out and say anything they possibly can just to keep the fear or put the fear out of the market so it just doesn't crash. Can the markets crash on Monday? Yes, it can. Okay, so you want to be very careful when you take any long positions in the market right now. Again, like I stress, counter trend trades, especially in a bearish market, is very risky. Okay, not impossible to do, but it is at a higher risk. All right. This is a chart of Apple, and there's nothing like looking at the chart of the leading stock for the technical sector. Okay, the technology sector is Apple, obviously. I was able to recalculate. However, I have a little note here. I don't know if you can read it. It says if another down day, this will be an intraday support. Next support is 498.43, which is down here. Okay, so this is going to be your major support, and this is going to be your possible intraday support, and that is provided we get another down day tomorrow. So if Apple comes down tomorrow, right now the low of this candle is well, the close is 560.99. This is 549.87, so that's about a $10 drop. If Apple comes down $10 on Monday, this may be good for intraday, an intraday long position. However, here's a caveat. Okay, if we get a down day on Monday, then that means the validation for this 498.43 exists. Okay, the calculation is only valid. This 498.43 calculation is only valid if we get a down day, another down day on Monday for Apple. Okay, if we don't get a down day for Apple on Monday, then this 498.43 level does not exist. We need to have another down day on Monday in order for this 498.43 to be a valid support line. That's how the mathematical calculation works. Okay, so let's just say, for argument's sake, we get another down day on Monday. We get support here at 549. If we can get up to 603, okay, 603, or if you want to be on the safer side, 623.87, then you can take another short. I'm thinking of 498.43 will be the next major support line before we get a major bounce again in Apple. Okay. Now let's look at some stocks. This is a chart of Facebook. Okay, Facebook doesn't really have enough data, or very much data, for these calculations, but the calculations were obviously working pretty well until the last calculation made. Okay, let me just do a quick review here. Facebook went into the first level, got a bounce, came down. Okay, after we get a bounce on the first level, then it's no longer valid. That level is no longer valid, but it is valid for now a resistance point. Okay, so this is support. We got a bounce, we break through, and now it's considered resistance. Okay, we got a bounce off the second level here. Okay, we broke through. Okay, we retested because this is now resistance. Okay, and then we came down again, but we didn't quite get to this 26.18 level. We came back up, retested the previous support, which is now resistance, and then bounced off. Okay, now let's look at the daily here. And this is a perfect example of what I was talking about earlier. Take your profits fast. Whoever took this trade at, I think some people I know took this trade at $20, $28.10 or something like that. This candle closed up to 29.60, but they decided to hold because they thought the bottom was in on Facebook. Obviously, the bottom was not in. And then on Friday, Facebook closed at let's see, what's it closed? 27.72. So right now they're in the hole. They're not stopped out. You know, they're in the hole, but that's exactly what I mean by get in, get out. If you're in a bearish market, You know, if you're gonna go long, you just go in long for a little while and then you get out, or you put a break even stop, in which case you would have just stopped out break even and you would not be losing money today. A new calculation was created on Facebook, which is 25.78. I don't know if you can see it here, but it says $25.78. If you can get there, then I may take a long position on Facebook. One thing to note about Facebook, however, is Facebook went down, right? But it was unable. Okay, so this is Thursday's candle. Friday, we had a huge market downturn, right? But Facebook was able to hold. It did not close below the low of Thursday. So Friday did not. The candle did not close below this candle here, which shows me that this stock is still pretty strong. It's finding a bottom. It's baselining. Okay, so you know, don't think Facebook is going to crash. It is possible. It could be a lagger. A lagger, in my opinion, is a stock that looks like it's a stock in relative strength, but it just takes some time. So if the market comes down again on Monday, then this guy's not going to only go down, but it's going to come down really hard. Okay, so you got to keep your eye on that. But right now, as far as now, even though this stock went down 6.35%, $1.88, most say would this this stock would be normal. It wouldn't be in relative weakness, but and it definitely wouldn't be in relative strength because it was in a negative territory. However, I think this stock is in relative strength simply because if you compare it to on Thursday's action as compared to Thursday's market action, you look at Friday's market action and how much it went down. It wasn't really that much. So I think Facebook is finding a bottom. I do believe that this might have been the bottom down here, but that remains to be seen on Monday. Okay. This is a chart of Walmart. The symbol is WMT. This is another stock that I think is in relative strength. Why? Okay, so let's do a quick recap. I had a level here at 65.47. We actually hit 65.47. I did an intraday trade, made some money. We broke through 65.47, and then now, what does this look like to you? It looks like to me it's consolidating. A lot of people are calling this a shooting star candle here, and I would have to agree. It is a shooting star candle, and I also like the fact that it's on higher volume. But the only thing I don't like is I have another level here, which is 67.70. Also, in addition to that, I mean, we closed at 65.55, which is below the 65, which is above the 65.47 level. What does that tell me? Well, the markets went down, $3 and so cents on the SPY. Okay, to be exact, the SPY went down 2.52%. All right, at $3.31. Walmart, however, only went down not even 1%. It's down 0.41%. It's not. It's just like yeah, I'm gonna give you some of my gains back on Thursday, which is fine. Which is so Thursday went up and then gave some of its gains back, and then today, to me, what it looks like is it's consolidating for another move up to the 67.70 level. Now, a lot of people took this short. And that's fine. That's cool with me. I mean, because this is definitely a shooting star. We are, on higher volume. And check this out, okay? This is a weekly chart of Walmart, and as you can see, it created this very beautiful, what you call almost a gravestone doji. A gravestone doji is when you have a close at the very bottom here, open and closed at the very bottom. But this is pretty much close enough to being a gravestone doji. And in the Japanese, they call it gravestone doji simply because if you go long this stock on a gravestone doji, it'll take you to your grave, meaning it'll wipe you out and make you poor for life, because it's just going to eat you up alive if you go long when you see a gravestone doji. It's not necessarily a gravestone doji, but what I don't like on the weekly is that we did not have higher volume telling me that it's done yet. Yes, we could get a bounce off next week and we could pull back. Yes, that's fine, but again, you really want to short at your shorting levels. Okay, that's the bottom line. My shorting level right now is 67.70. If it can't get to 67.70, then I'm not going to take the short. Guess what? I won't lose money if I short it now and it goes higher. I won't lose money. But then if other people who did short it and it goes lower, then that's great. Okay. Bottom line is, I think this could be considered a consolidation pattern for another move higher. But we did get this. We do have actually two doji candles and a shooting star candle, which gives a lot of weight to the downside, at least to the 20 moving average. We're definitely overbought conditions right now. So Walmart is just screaming for a pullback. But right now, once we consolidate, if we consolidate long enough, then we will no longer be in an overbought situation, and then we'll be able to shoot higher. Okay. So all in all, what I think about Walmart is it's still a stock in relative strength, even though it was down, 27 cents compared to what the markets were down. I mean, Walmart is still holding up pretty strong, and I wouldn't be shorting Walmart right now. Okay. All right, some stocks, new stocks that I wanted to talk about is Caterpillar. I have a long position for a counter trend bounce at $80.51. So if it gets down there, maybe an intraday, or if anything, maybe just a day trade. Okay, again, these markets are falling and they're falling fast, but I just wanted to let you know what my levels were for Caterpillar. In addition to that level, we are at that 75 retracement. Also, we have this pivot point here. So, it's a pretty good support level for at least a 1 day bounce, maybe. Again, after a day like on, Friday, you just understand that the risk is, higher if you do a counter trend trade. Okay. This is a chart of Exxonmobil. Okay, so I have a calculated level at 76.21 and another one at 75.06. Okay, you see 75.06 right here. Um, this ExxonMobil is coming down pretty hard. To be honest, at this double bottom here, you could take the double bottom trade here for a lower risk bounce trade. However, I do think, I mean, we do have this doji candle here, but again, the volume is just not enough for me to take this trade to the long side. Again, counter trend trades, you want to be very careful. So 76.21 would be the level that I would take a bounce on for maybe an intraday, and 75.06, or maybe even something maybe in the middle over here. My stop out would be down here. So if you really want to be cautious, at 73.84 would be my next bounce move on ExxonMobil, symbol XOM, and that's if we don't consolidate first. Again, if we come down and we consolidate right before it, then that gives you enough juice to break down through this pretty powerful support level there. Okay. This is a chart of Amazon, code AMZN. This is one of my favorite stocks that I used to always trade. However, I stopped trading it after this big move here. My mathematical calculations, again, this is off earnings. It does not work during earnings, so I have to wait for data to accumulate first before I can get my levels in. Enough data was able to get in, so I was able to get levels for Amazon. We have a Fibonacci 382 retracement here. We also have a 197.93 mathematically calculated level here. In addition to this level here, we have this gap fill, you see. So this is going to be pretty strong support for, again, is going to be just a very quick bounce. Okay, again, we're in a downtrend. If you take this for a bounce trade, you're going to be in and out fast. I mean, if you want to just stay in the market for an hour, make some money, get out, I mean, that's the best thing to do. After we come all the way down and we get a bounce, then I'll be able to calculate how far the bounce would go before another short can be initiated, because we are obviously in a bearish market at this time. So I guess the biggest question after watching this long video is what's going to happen on Monday or next week. Well, Mondays, okay, as everybody knows, is low volume days, so that gives the institutions enough time to prop up the markets, or enough leverage to prop up the markets. I say that about Fridays, Mondays, and before holidays and after holidays, simply because majority of the time that happens. Friday obviously did not happen because of all the fear that it was introduced in the market. Again, fear, and nothing will override fear. Fear is the strongest emotion in the markets, and once you have fear in the markets, then it's just expected to fall. Okay, luckily it happened on Friday. If it happened on, say, Tuesday, then the markets probably would have fell all the way through Friday. Okay, we have the chance of a weekend to recover, but that remains to be seen on Monday. So let's take a look on the charts to determine. Again, it's not what I think, it's what the charts are showing us. Okay, on the SPY, we are into some support here. If I grab this line here from this breakout, this is a consolidation period, and normally consolidation periods are definitely support areas and resistance areas. Okay, we are right into it now. We kind of pierced a little bit below it. That shows a little bit negativity. However, we may get a bounce on the SPY because we are into some support, and we've broken down through that 200 moving average. There is a possibility that we can get down to the 618, and if we do, then obviously it's the 123.13. But we're just concerned about what's going to happen on Monday. I think after a big move, we have a chance of a dead cat bounce, and we are into some minor support. Again, this is minor support, not major. Major support will definitely get a bounce, but the minor support remains to be seen. So on the SPY, we have a +1 because we are into support. Okay, this is a chart of the GOD. We just talked about the GOD. Right now the GOD is into resistance. We have the gap fill plus a 50 moving average, so there is a good chance, a possibility that the GOD will pull back. Now if the GOD pulls back, that means people are taking money out of gold and putting it back in the stock market, which basically means that we may get a little pop in the markets on Monday. Okay, so that's +2. This is a chart of JPM, which is a leading stock in the finance sector. We are into support here, which is $31.79. We may get a possible bounce, so that's +3. Apple is almost into good support, not quite yet. So the technology sector is not into good support at this time. So I will give this a neutral status. The JJC right now is also into support. It is again minor support. So if we can get down to this 41.46 as better support, but again, it's minor support. However, we could possibly get a bounce on the JJC. So what am I trying to say? Well, the charts are telling me that most of our leading indicators are saying that we may get a small bounce on Monday simply because we're in minor support. It would have been much better if we were into some major support, but we're not. So you know, I'm gonna have to give this a neutral to upside bias on Monday. If it happens, it's gonna happen very short. It may, you know, gap up on Monday and then head back down, or we may gap down on Monday and then head back up. Okay, so it's going to be one of those two things. However, okay, keep in mind, again, like I explained in the earlier part of this video, fear is the strongest emotion. It does not matter what my technical analysis says. At times like this, when fear is high and the VIX is popping, then you know no level is going to hold. It's best to stay in cash, wait for the markets to settle down. Volatility is great. I mean, you want to trade with volatility, but when you have volatility with this amount of fear, then you want to just stay out of the markets. If you want to dabble here and there, that's fine, but be very cautious. Do not enter. I mean, if you play with 10 grand, you know, play with 5 instead. If you play with, you know, 100 grand, maybe play with 25 grand instead. You know, keep your money management limited, so in case the markets do crash, then you're not hurt that bad. For me, I'm probably gonna stay you know, in cash. I did take a trade on USO. This is the chart of USO, which is the ETF that tracks oil. Okay, the reason why I took a trade at USO is because it was right into my 3160 calculated level here. It pierced through it, so normally I wouldn't take it if it pierces through this level again, because there was so much fear introduced into the markets. Oil came down as well. The reason why I took it, I actually took oil all the way down here at this this bottom trend line here, so I'm actually in the money even though there's a red candle. Now my stop out will be this green line over here, and obviously if it gets past that green line, then we're gonna get to this 29.79, which is my newly calculated level, because I was able to get more data for a little bit more accuracy. So we may actually get a bounce tomorrow on oil. If I do, then I'll probably get out as quickly as possible. We also have this bottom trend line here taking me back all the way back to this point here, which is 213 of 09. Okay, so I like this trend line. If it gets past this trend line up here, that's fine. If it gets past this bottom trend line here, okay, well, that makes it look ugly. If it gets passed through this trend line here where I took the actual trade, that's fine. My stop out will be any close below this bottom trend line here, and then, you know, I'll wait for it to get to the 29.73 level and see how it plays out from there. Okay, so currently I have a very small position in the USO just to kind of dabble right now. Some you know, I'm going to play the dead cat bounce scenario. Plus I do see minor supports in all the major you know, stocks in each index. So, and I'm pretty confident that we may get a bounce on Monday. If not, I stop out, take a small loss, not a big deal, and then I wait for my short entry. Okay, so this is your 7-minute market update. Good luck to you all. God bless to your trading next week and your future for trading. And thank you for watching this video. I hope to see you in the next video. And